I want to welcome everyone to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, January the 8th, 2012. As the markets open right now, we are getting the dollar gapping up a little bit. Euro, dollar gapping down. Euro gapping down pretty much across the board. And even dollar yen down. This euro yen gapping lower as well. No real major news over the weekend. We did have China new loans come out this morning. Better than expectations at $641 billion versus $575. Money supply also increasing. So the Japanese certainly doing their part. But look at the S&P chart. It looks good. I mean, this thing looks like it's trying to break out weekly. But once again, we are getting a divergence. We are getting the mother of divergences where maybe it's interest rate differential. Maybe the markets are going to start anticipating the fact that the U.S. is going to start raising rates in 2013. Should these numbers continue in the jobs market? Now, I don't think they're going to. I think that one of the things that really helped 2011 was the ability of corporations to invest in capital equipment and depreciate 100% of it in 2011. That should mean corporations are done. Have nothing. They shot their load. Pardon the phrase. But it's true. So I just think the middle of 2012 does not look good from the Middle East. Situation is getting worse. There are 9,000 combat troops in Israel right now that just got moved over there in a blink of an eye. Half of them are logistical support troops, which means more troops are going to be on the way. And no one even talks about it. Now, one thing it's very important to understand about the U.S. military at this point, the U.S. military is a seasoned, hardened battle group. Iran has not even fought a freaking war. The U.S. has been at war for over 10 years. Think of the kind of troops that we have in the United States military. Experienced personnel in the latest tactics. Teaming up with the Israelis. And believe me, they're going to be there for a while. So I just think things in the Middle East are heating up. And, of course, Europe is not getting any better. This is a big week for the Eurozone. And I think that can the S&Ps continue to break out, grind higher, and the dollar continue to go up? Sure, I guess. It's not like the Aussie dollar's collapsing. It's really just the euro, as we've been saying to you over and over again. Now, I think that we are getting a little bit oversold in the euro-dollar pair. Other euro currency pairs, not euro sterling, really. And I could see this week being a possible pivot week, for sure. Maybe the S&P is going to continue to break out. But when we look at some of the numbers coming out, the S&Ps, they look good. Monster wedge, completely breaking out above the wedge. And a lot of times the first move in a wedge, in my opinion, is the fake out. So maybe we get up to 1,300 and we reverse this week. Maybe the dollar continues to explode. Maybe this dollar index is really on the march towards 88, which now everyone's talking about, right? I brought this to your attention how long ago? Hello. There it is. Moved. Dollar index continues to look good. Grinding higher. Not exploding, mind you. Yes, we were at 74 in the beginning of the summer. But it certainly looks like once we clear this tower, there's going to be momentum. That channel line is, drum roll please, 87 and change. But I think, for a reversal, for a pullback, I think we're due for a fib. And that's looking like 82.77. And look, that was the breakdown here as well. So 82.77, this was a big spot here, real big meltdown. Should be monster resistance right here. in that zone. So that's a nice penny and a half in the dollar index. That means we got more to go. Euro dollar. We got a lot of numbers coming out. Man, we got trade balance. It's a big week for trade balance. Global trade we're going to start seeing. How bad is the euro contagion affecting the global trade market, right? So look for that to have a dramatic impact, in my opinion, if the numbers are really that bad. Now, true, it is in the past, and everyone's pumping money into the system to try and get it going. So maybe the numbers going forward will be better. The U.S. certainly is doing its own. So on top of that, we have an interest rate meeting at the ECB. Draghi is going to be talking. So it should be very interesting to see what he has to say. Maybe the ECB is going to cut rates. I doubt it. They certainly could go down to 0.5%. Things are that bad. Or maybe there'll be some sort of an announcement, but certainly going into Thursday, we could see that in the euro. A reversal. But it looks like the beginning of the week was certainly going to go lower. That 25.75 level was looking very interesting. The support zone around here. But clearly, the euro could be in for a free fall. Clearly, we could be going for this channel line. Clearly, this is our 87.20 on the Dixie. 84.70 is more like 125. And I think when you look at the weekly, really, big breakdown. All through support, couldn't reverse. Even almost an outside candle. It's done. More to go. Certainly tonight in Asia and Europe. Could we reverse? Absolutely. But the beginning of the week, this is not going to be looking at it very good. Now, as far as numbers, we got Australia retail sales tonight, Sunday. Aussie looks like it really wants to come in, but I'm having a very hard time being short the Aussie with the stock market going up. I think gold looks like it's going to reverse this week. Dollar's going up and gold's hanging in there. Give me a break. So that's going to diverge as well. I think gold looks terrible. But you look at the weekly chart, that's a nice little reversal candle. That's a doji. That's a boy. Look, you can't really see it that well. But it certainly did reverse. And you would think we're going to have one of these, continuation. So you see the doji here. We came in the next week. But then the next week we went right back up. So again, I'm not looking, because the stock market is not really selling off sharply. I can't tell you to jump on board the trains leaving the station for the Aussie to melt down 700 pips. Which technically it looks like it's going to break this wedge. It's over. But I don't see how that's going to happen, given the stock market's holding its own. I continue to believe this is a euro story. Euro across the board. But again, retail sales tonight, you get a bad number, Aussie could easily come in 101.50. I mean, that looks like easy. Chump change. Channel line 99. Looks more like it, 98.50. Maybe the stock market's going to go higher. Maybe we're in a reverse correlation. I don't think so. And I think we do snap back on a Tuesday, something like that. But again, it's all about the numbers this week and the events. We got MPC, ECB, trade balance numbers all over the place. China is on Tuesday, I believe. We have a light day on Wednesday, not much. Beige book, that's going to be important on Wednesday for the U.S. London trade balance. China's CPI data on Thursday morning, Asia. Big Thursday, people. Big. B-I-G. Final CPI. France, Germany. Preliminary machine tool orders out of Japan. That's a big number. Manufacturing production. Industrial production, then, of course. MPC and the ECB. Oh, baby. And then we get the U.S. retail sales. Mama. Unemployment claims, just a litany on Thursday. So the net skinny of it all is, I think, Friday's retail sales also in the U.S., it's going to be big. I'm sorry, trade balance. Retail sales on Thursday. Trade balance also on Friday. Michigan sentiment. And that rounds out the week. But there's a lot of good stuff here. Not necessarily in the U.S. More the global trade. And inflation. And then central banks. So I think that the key is going to be going forward. What does the market see going forward? How bad were the numbers? And is there any clarity after the ECB? If the euro can get clarity, to the moon. But you look at this euro yen, it's toast. Bye-bye. Closing, gapping down, close terrible. This thing is in a freaking free fall. It's getting a little bit overdone. And again, I think in these kind of markets, you really want to scout. If you're trying to pick these things up, you got to take your trade. You got a 30, 40 pip bounce, take your trade. I don't think we're going to do a slingshot. Certainly we should. And this thing is oversold big time. But then you look at this. And it bounced over 1,000 pips. That means this could go to 90 if you measure the move. I just have a hard time being short right here. I tried buying it on Friday. I went home flat. So, I said probably want to go home short the euro, but last time I did that, I got my ass handed to me. So I figured go home flat. Of course, it worked out this week. Amazing. I think Cameron came out and said he's going to be in support of IMF funding. You would think that could be a positive, but doesn't look it. So euro yen continues to look weak, continues to go lower. Could we have a reversal this week? Absolutely. But euro sterling looks terrible. And once again, I continue to tell you, it's going back here. 75, 77. Euro sterling has no business trading at these levels. None. Fundamentally, Eurozone was better back here. I mean, London, to me, is in better shape than the Eurozone. They've addressed most of their problems. At least kicked the can way down the road. Euro Canada, it's in meltdown territory. I think we go lower. I think we get down to maybe 127. Broken, busted. I mean, this thing, we could be talking par. Par. I mean, the euro is collapsing across the board. And I'm telling you, this Euro Swiss, the SNB is not going to be able to hold its own. It's going to have to break. But it's holding it up like a rock. You can't trade it. But I'm telling you, this thing, any move to the upside is a sell. Big sell. But you got to stick it out. Some sort of contagion. But, I mean, it's bullcrap. Peg to the euro. How could they just peg to the euro? Dollar yen, a little bit of a doji, but looks terrible. Amazing. Euro yen is toast. Now, unless they do some sort of intervention, dollar yen just looks like it wants to go lower. Maybe retest 75.50. But we go near the 76.50, the floodgates are going to open up. We could go right to 75.50. It's a doji. Maybe it holds, but it doesn't look good. Dollar Canada looks like it wants to explode. I mean, look at this wedge. That's when Euro Canada will go. But this is one hell of a wedge. And I'll tell you what, you take a look at this outside candle here. Took out the low, took out the high, and closed strong. DC looks Betty good. And it even took out the channel line. Break it down to break it out. And you got commodities, like I said. Commodities to me look terrible. We'll take a look at those at the end of the broadcast. Terrible. Dollar Swiss, breaking out. I still think this is going to be a great short, but for now, dollar is king. So it's going higher. But this will be a great short. Absolutely. Just a matter of when. But right now, it's going up. I can't buy it, but I'm not shorting it. Channel line, 105. Oy. That's 110. I will be short it before that. I do not believe it's going to get up there. Maybe one par. I can see par, but certainly not 110. Cable. Rolling over. But again, with Euro Sterling so weak, it's putting up a nice fight. But it certainly looks like it wants to come in 151. And again, it's all about the stock market. All about interest rate differential. You take a look at like pound Aussie. Pound Aussie has really not been going up. Stock market's been going up. Risk on. So European currencies been getting hit. If the stock market can just come in, this will be a great trade to the upside. It has not broken 150. Euro sterling is going to continue to go down. Cable's going to outperform. Commodity currencies are at some point going to have to give in. So while this trade is not working, you need the stock market. Right now they're selling European currencies. And once that stock market come in, then we got something. And remember, people, I have a premium junior service. Email info@globalfxllc.com. It's only $50 a month. Cheap. You freebies? Email me to find out what you get. Maybe I'll throw in a free webinar once in a while. Maybe. New Zealand tried to break out, failed, rolling over. Right up to resistance, a little bit of a stall here. Now it looks like it wants to go down. Again, it's just, to me, these markets are very hard to trade when you don't have the wind at your back. Meaning, when you have the stock market going down, dollar going up, it's easy. You got the stock market going down, that's your cards, you wind at your back. When the correlation's out the window, it makes it a lot more tough. So, let's take a look at gold. Certainly impressive. Did close relatively strong, above previous week's high. But you look at this downtrend, we get to 1650, unload the dump truck. 1700, get a Caterpillar tractor. But I don't think this was the bottom in gold. I do think the fact that Soros and Rogers all jumped on the bear bandwagon, even though Rogers is a long-term bull, saying 1200, and that was the bottom. Soros jumped on too, saying gold's in the bear market, and you knew it was going to bounce after that. But I just think, we get in the zone 50 for sure, and then 1700, absolutely. Crude, in my opinion, is another story. Crude is getting bid up because of risk on, meaning at times when there's more risk, there's a risk premium. And crude right now is trading on risk premium because Iran shutting the Straits of Hormuz, talking the U.S. down. I'll tell you, Egypt is going under. And we're going to lose Egypt to the Muslim Brotherhood. And Egypt is going to become a radical state with all of our know-how and funding we've given. And they're going to throw out the 1978 peace accord with Israel, and then hell breaks loose. On top of that, again, you have the U.S. troops on Israel's soil. Not that's the first time it's ever happened, but still pretty big. So, and you have Iran that says any sanctions, they'll shut the strait, they'll shut it down. And the U.S. said, you do that and we'll attack you. So we're at the brink, verbally. Who's going to blink? Because someone needs to run a head-on collision with Iran based upon the rhetoric. So crude, I think, go a lot higher. You could be talking 200, up $50 one day. Stocks will be down on that. All right, people. So again, as far as the week is concerned, I think it's going to be dollar up beginning of the week. And then as global trade numbers come out, as they worsen, the stock market's going to come in. The dollar's going to basically top out. And then maybe Thursday, we could have a nice reversal going into the weekend. And the euro could bottom out. But at this point, this chart looks ugly. I mean, you can't buy this thing. Certainly down to this low here, maybe. But we're going lower. Again, in this environment, if you want to try and go against the trend, don't look for big pips. We're going lower. Look for bounces to sell in the euro. If you're going to buy it, buy the break and take your trade. You'll know the bottom. We'll see it. It'll be on volume. It'll be a hammer. And it'll be on news. All in the same day. Andrew Spanton. info@globalfxradio.com. Twitter, Voice of Forex. Facebook, Voice of Forex. And, of course, YouTube, Voice of Forex. The only voice you'll ever need. Who truly loves to make you money. Oh, baby. Should be a good week. Isn't it time to go premium? And remember, I'm doing a webinar on Triple Roll a week from today, 3 p.m. Eastern. The first 20 people to email me get in for free. The rest of you are blocked out. But I believe that the Wednesday trade, when interest is paid on a triple basis, is coming back. It's been working. And I think interest rate differentials are going to become more important as the year goes on. Andrew Spanton, Global Markets Radio, the only voice you'll ever need, who truly loves to make you money. Ching, ching.